Hey, it's Tyrone Jackson, the Wealthy Investor, coming at you with another educational video, timed specifically for what is going on in this market. Hey, if you like the content you get here, make sure you click that subscribe button and put your notifications on. So every time I want to communicate with you, you get an easy update. All right, I want to talk to you about what's going on in the market right now, and I want to highlight one company in particular as an illustration of what not to do when you are trading and investing in the stock market. I want to talk to you about a company I actually love, and it's a brand that's hit the new market here, and it's a company called Beyond Meat. And many of you know this is a plant-based product that has the taste and consistency of actual meat, and it recently went public. Okay, so great company, great idea. The health and political benefits are all there, but I'm here to talk to you about how to make money off of the stock market and how to grow your wealth with less risk. So we know that the company went public in 2019, and I want to show you something. Sometimes when a stock hits the open market, there's just an out and out frenzy for it. And when it hit the open air and it actually went public, it went public at $65.75, and there was a feeding frenzy for the stock, and the shares went all the way up to $234 per share in a very short period of time. And then all of a sudden, as you're seeing here on the chart, the stock just reverses. Now imagine if you're in the middle of wealth building in your account and you're trying to pick solid investments and you see this kind of reversal where the shares go all the way from up here, a high of 234, all the way back down to about $81 a share. How could that happen? Where are all these sellers coming from? Where are all these buyers coming from? Well, see, I talk to you all the time about having a financial education. When a company goes public, that's what's known as initial public offering. There are people who actually purchase shares on the inside before the company goes public, and they're what's known as in a lockup period. What that means is they bought the shares at a much cheaper price than the IPO, but they're not allowed to sell those shares for a range between 90 and 180 days post IPO. So what do you think they're going to do in a stock that goes public and all of a sudden goes from $65 a share to an all-time peak of $234? When that lockup period expires, they are going to sell hands down. Institutional traders and institutional investors who bought the stock on the way up, they're going to stop out. You know this is a stop loss order, right? And they're going to let the stock drop back down to a very low point and simply buy it back. But see, if you're not a Wall Street pro and you think you want to get in on the latest, greatest thing, that is not appropriate for you and I who are in the wealth building mode. Now, when this company actually released its first earnings as a publicly traded company, how did they do? They made $92 million on the top line, which you think would immediately cause the stock to rise. But no, the stopping out and the lockup period caused Beyond Meat's shares to fall all the way back down. Now, remember at the beginning of this video, I told you they came public about $65 a share? And at the time that I'm delivering this lesson to you, it's 81. So they really haven't advanced beyond their initial public offering. This is why you never chase growth stocks. Instead, look at this picture, because this is the wealthy investor approach to the market. This is the same market in a company that's a member of the S&P, which is MasterCard. So I want to make the distinction here. When you're trying to grow your value of account and you're trying to grow your stock market portfolio, you want those boring names that have been around for a while. Companies like MasterCard that have matured and are doing what? Making more and more money, generating more top line revenue, and raising their dividend. When you understand that IPOs are not for you because they're too risky and that you want to stay in these Dow stocks and these S&P 500 stocks, that's a better position for you to be in to grow your wealth in the stock market, not chasing the latest, greatest thing. And how do we know? Well, I like to teach you from what I call the Sesame Street version. Look at this picture and look at that picture. One of these things is not like the other, as they used to say on Sesame Street. We see a stock that is hot, lockup period ending and stopping out, and one that is what? Steadily growing. Be smart. Be a smart, wealthy investor. Don't play games with your money. Don't take unnecessary risks because you think you're going to get rich quick, because more often than not, it is going to backfire on you. So I want you to be smart. I want you to follow the trades that I send you at WI Trade School. Watch the videos there. If you want the guidance and the help and the recommendation for the stocks that are going to help you do well in this market, WI Trade School is the place to be. That's why I created it. A lot of people call it Netflix for stock market traders. It's got a video library there that is just awesome. And you can go back and watch videos from 2 years ago and see steady stocks that have grown in value. All right, so the lesson of the day is don't get too aggressive. Don't get too greedy, because all it takes is one stop loss from a series of institutions and you will lose your money, or one lockup period on an IPO, which could cause a swift reversal. Hey, I always like to hear what you have to say. Leave your questions and comments down at the bottom, and I will get back to you. And yes, I actually do interact with many of you, and I really appreciate your positive feedback. Hey, listen, that's the lesson for today. I'll be looking for those comments. Tyrone Jackson, the wealthy investor from WI Trade School, saying be smart, be open, and get that financial education when you want to put your money to work in the market.